This is you, this is your company. Profits in the company create taxes. So what we need to do is eliminate the profit. How you do that is your company creates a holding company and transfers the profit here. This holding company then buys an appreciating asset that you can take loans against. The purpose of the holding company is to make sure that when the loans are taken, it can take care of the company's business expenses, the purchase of business assets, payroll, and all things related to the business. Because we're using loans to then come back out to take care of you, we create no taxes because loans are not taxable. Then the income comes back into the business and we create the entire cycle again, which creates no taxes.
Okay, so that's interesting, but wrong. So let me kind of go over how it actually works. Because in theory, he's talked about some things that work. Like, for example, loans are not taxable, but you do have to pay them back and you have to document them. And if they're with your own company, you may have restrictions on the ability to do it. You want to make sure that you're doing so legally and documented. And you do have to make payment and you do have to pay tax on that income that's being derived. So he makes it look like you have profit and it goes to your holding company. Somehow you don't pay tax on that, and that's not true. The business, depending on whether it's a flow-through or a tax-paying business like a corporation, a C corporation, S corp version would flow through. If the business is paying its own tax, then if it distributes it out to a holding company, that's a dividend, that's taxable. If the company does not pay its own tax, for example, if it's a partnership or an S corp, then that flow through, the tax actually goes to the owner, which would be the holding company, and it would pay the tax. There's no way to escape that. I think what he's thinking of is setting up a company that you pay, like a management company, but then the receipt of the management company, it would pay tax on that. There's not a way to avoid paying tax on profit unless you expense it away or you put it like into a 401k or DB plan or some sort of retirement plan, in which case it's deferred. There is no situation where the business magically doesn't have to pay tax and it can loan you a whole bunch of money. That does not exist.